afternoon, and welcome to Thomson Reuters World Headquarters, where today I'm pleased to say that Chrystia Freeland, Reuters Global Editor-at-Large, will be speaking with Jim Rogers about investing in a time of great uncertainty. Jim probably needs no introduction, but he is a major player in the commodities fund business. He's been an avid critic of government intervention in financial markets, and he's co-founder of a recent interviewee, George Soros, the Quantum Fund, that Chrystia spoke to George not long ago. So, Chrystia, Jim, we're really pleased to have you here at Thomson's World Headquarters. Chrystia.
Okay, well, thank you very much for the introduction, Chris, and thank you everyone for coming. I'm going to ask Jim questions for about 40 minutes and then throw the floor open to you. So if you're getting frustrated with my questions, do not be dismayed. You'll have your own chance. And it's really a delight, Jim, to have you here. Jim, as everyone knows, was very early on the Asia story. More recently, I think it's fair to call you a scourge of the Fed. I think Ben Bernanke is probably terrified every time he knows you're going to be speaking.
I'm terrified every time he speaks.
See what I mean?
Do you hear some of the stuff he says? If you believe a grown man would say that out loud, but he does. I think he actually believes it. Sorry, go ahead. I didn't mean to interrupt.
No. Please carry on.
Well, I'm just stunned that an adult would say some of the things they say in Washington and expect people to believe them and to listen to them, especially Mr. Bernanke. Mr. Bernanke, who's been wrong every time he's opened his mouth in the 7 or 8 years he's been in Washington. You know, if I came on your show or came to Reuters every month for 7 or 8 years and I was always wrong, never right, you probably wouldn't invite me back anymore. And yet people still invite him back.
Well, he does run the Fed, so...
I still wouldn't... Well, first of all, I'd get rid of the Fed. But second, if you can't do that, I certainly wouldn't listen to him.
So we were all listening to Mr. Bernanke over the weekend when he made some pretty strong remarks to 60 Minutes, in particular suggesting that there will be more quantitative easing to come if necessary. What's your view on that?
I don't have a TV, so I didn't see it, but I did read about it on Thomson Reuters.
Of course, your only news source.
I was dumbfounded. You know, the first time that they printed all that money and spent all that money was beyond comprehension. And the fact that they're doing it again. You remember, Chrystia, a year ago at this time, they were talking about how they were going to be withdrawing all that excess money they'd thrown into the system. Here it is a year later, and they're talking about putting even more into the system. Why do you listen to him?
Well,
I mean, first of all, no, I know why you listen. I know why you listen, because he's got $600 billion to put into the system. I would listen to him too, but it is not good for the world. It's not good for America.
Now, let me play devil's advocate here. Ben Bernanke says he has to do this because unemployment is so high in the United States, and he doesn't see an inflationary threat. Why is he wrong?
Why is he wrong about it? You shop probably, or maybe your butler does your shopping. I don't know.
My husband will be happy to be called my butler. I'll tell him that's me.
If you shop, everybody in this room knows prices are going up of everything. Education, tolls, taxis. I mean, I took the taxi in here. I'm telling you, the prices of everything is going up. Food prices are going up. Insurance, everything, all these prices are going up. He says there's no inflation because, first of all, he doesn't know, and second, the numbers he uses, he relies on the BLS, the Bureau of Labor Statistics. Well, those numbers are fraudulent numbers. Those numbers
fraudulent numbers?
Yeah, fraudulent.
That's a strong
You can write that
word.
down. Wait till I use really strong words. No, those numbers are sham. Something like, I don't know, what is it, 20 to 40% of the numbers, depending on how you look at them, are based on housing. Now, when housing was going up, they said it doesn't count, and now that it's going down, they're throwing that in there. But the prices of everything, have you bought any tin recently? Have you tried to buy any cocoa recently, any sugar recently, any rubber recently? The prices of everything are going through the roof, and they say they're not.
What about the unemployment justification? Isn't he right to be worried about that? And given that we're not seeing a fiscal stimulus, isn't he right to be doing what he can?
You can take short-term measures. But in the long term is what we have to worry about. If the country's going to continue to do well. Many people have tried to debase their currencies for hundreds of years as a way to make things grow or to revive things. It has never worked in the long term. It has never worked in the medium term. Sometimes it works in the short term to debase your currency to make things better. But it's the short term.
It wasn't too bad for Russia in 1998. That default and devaluation turned out to be a real turning point for the Russian economy.
Well, I'm delighted you brought it up. That's what they did. They collapsed. They didn't sit around propping up everybody in sight. The Russians collapsed in 1998, had a terrible 2 or 3 year period, but out of that, there came a great...
They did default on their debt. Is that what the United States should do?
Well, I'll let you decide that. But there are people who will tell you, who've done more homework than I have, that the U.S. will be defaulting on its debt in the next 5 years because the numbers are so staggering. That's the point. Part of the point I'm making is Mr. Bernanke is making the situation worse with all of these things that he's doing. He is creating money, he is adding debt, and that's going to make the situation worse in the long term. It may make things look better for a while. You have young children. I mean, are you worried about the next 2 or 3 years or the next 22 or 23 years? Mr. Bernanke's worried about the next 2 or 3 years. I'm not. I'm worried about, I have young children too. I'm worried about the longer term.
Now, yesterday also, we're in the middle of the Reuters Investment Summit, and we interviewed John Taylor, whose view of the sort of implicit rationale behind the Fed policy was that effectively the goal is to inflate away America's foreign debt. Do you buy that?
Well, I don't think they're smart enough to have that long-term goal. That's one of the results that will happen, though.
But they're not doing it on purpose? It's just lucky?
No, I think it's just it's a byproduct of what they're doing. They're more worried about the next quarter, the next year, the next election than anything else. In the end, of course, it does inflate away the debt. But my goodness, what kind of result is that? The whole country is ruined as they inflate away the debt. I mean, throughout history, when countries have had big inflation, it's caused serious social unrest, political turmoil, often led to war. It's not a good way to get rid of your debt.
Now, hearing your critique, I'm almost sorry for all the guys in Washington, but I am going to ask you about a few other people in Washington. What do you think about this tax deal?
The tax deal that we think was announced last night?
Exactly.
Well, it's whenever you raise taxes, it's not good. So I prefer the solution of not raising taxes to raising taxes. I mean,
so this is a good thing? This is a good sign?
It's better than the alternative of raising taxes. I mean, everybody in this room's an adult. Who is better qualified to spend their money than they are? Mr. Obama? Mr. Bush? Mr. Clinton? I mean, come on, be serious. They're better judges of what to do with their money than the politicians in Washington, and it will be better for the American economy. So not raising taxes is always a better alternative.
Even the estate tax?
Listen, there are many countries that don't have estate taxes, which do extremely well, because they think that people who work hard and save and earn money should be able to keep their money or do what they want to with it.
You referred to your concerns about the long term. Doesn't this tax deal increase those concerns? I mean, doesn't it make you more worried about the fiscal position, about the deficit?
No, the way to solve the deficit is to stop spending so much money. It is staggering the amount of money that they spend down there and where it goes and how it's wasted. Other countries don't have these gigantic expenditures, and they seem to do pretty well. America has troops stationed in over 120 countries in the world. They're not doing us any good. They're making enemies all around the world, and they're costing us a huge amount of money. I mean, I can go on and on. The solution is to stop spending so much money.
Even on projects like infrastructure? You live in Singapore, you see the glories of Asian infrastructure. Shouldn't America be spending money on projects like that?
There's no question. We need infrastructure, yes, but we don't need to waste our money. And a lot of the money, as you well know, is built on bridges which fall down. No, I'm all for highways and ports and airports and things that do good things for the country, that increase productive capacity. But how much of our spending is going to that? Not very much.
Okay, I think we've tortured the American politicians enough. I'd like to move to another group who are probably worthy of your critique, and this is the Europeans. How do you see the sovereign debt crisis playing out? Is the deal that we've seen with Ireland going to work? Is it all over?
No. The idea that you can prop Ireland up is not good for Ireland. Why should poor, innocent Irish taxpayers suddenly be on the hook for the Irish banks who made the mistakes in the first place Suddenly, poor Irish innocent taxpayers are going to be paying off bondholders of banks and stockholders of banks. That is unbelievable morality. What kind of morality is that? And second of all, it's bad economics. Let them fail. They made the mistakes, let them fail. When I make a mistake, I can't call somebody up and say, come and bail me out. And the Irish shouldn't either. The Irish should go bankrupt. The way they are bankrupt, let those banks go bankrupt, start over, just as Russia did. Russia and Korea and Chile did it once before.
Argentina?
Lots of people have taken the lumps, gone bankrupt, and started over. And usually, Scandinavia did it in the early 90s. Then they usually have had a 10, 15-year very, very good period. The Japanese tried it the other way. They refused to let anybody go bankrupt, and so for 20 years they've had 2 lost decades now. You remember the zombie banks and the zombie companies? We're doing the same thing. We're going to have another lost decade or 2.
If Ireland took such drastic measures, though, would that be tolerable to the other Europeans, particularly the Germans and the French? I mean, wouldn't their banks suffer, and isn't that part of the story? Remember what an outcry there was when Iceland took that route.
Iceland went bankrupt, yes. And you know what's happening in Iceland now? They're booming. I mean, Iceland's having a wonderful time. Iceland's got one of the most vibrant economies in the world right now. When you're bankrupt, you're bankrupt. You can lie about it, you can paper it over, you can do whatever you want to. But it doesn't do any good. It just drags out the pain and makes it worse, as the Japanese have found out. I've just cited several examples of countries which took the pain, started over, and have had a terrific time. The one country which did it the other way, Japan, is still suffering. We're going to still be suffering too in 10 or 20 years, and the Irish will be suffering too if they do it this way. And to the EU, I mean, Ireland's got 4 million people. The EU has several hundred million people. It's not very significant in the big scheme of things.
Are we going to see a domino effect? Are we going to see Portugal, Spain,
They're all going
Italy?
to be, well, the way they're going right now, they're all going to be bailed out, which is not going to make the system better either. They're corroding the value of the euro, and they're corroding the value of the European community. Now, I own the euro, don't get me wrong. I own the euro as we speak. But this is doing long-term destruction to the euro. I don't expect the euro to be around in 10 or 15 years, and part of the reason is because they keep doing things like this and destroying the value of the euro.
So how is that scenario going to play out?
With their scenario, the way they're doing it?
The euro is not going to be around in 10 years. How's that going to happen?
They're going to keep propping people up.
Who falls next? Who needs to be propped up next?
Well, who next? They all do. Greece. I mean, you should go to Thomson Reuters and punch in, and you will see that Greece, Portugal,
The answer to everything. I love this.
Belgium, lots of countries in the southern part of Europe especially have made serious mistakes over the past 20, 25 years, and they now are sitting there saying, save us, save us, save us. The way it will, and apparently they're going to be saved, the way it will work out, eventually some politician is going to say, you know, we're all really good people here. Our problems only come from Brussels and come from the euro. And either he's going to pull out or Brussels is going to give him concessions, which they're doing now. And either way, you destroy the euro from within, and eventually people do pull out or get thrown out. One of the two, and it ends the euro. No currency union in history has ever worked. This is not the first time people have tried currency unions, I assure you. None of them have ever worked.
And what's your time? Well, the United States, you could describe as a currency union.
Well, you could
it's
describe...
still kind of working. It's a pretty good country.
Well, we'll discuss whether it's working too. We started discussing that before, whether it's going to continue to work. That was a little bit different. It was where a single currency was imposed upon a single economy with a single government, which is one reason it worked. That's not quite what I consider a currency union. But yes, it's working. We'll see if it continues to work.
On your European endgame, when do you see this really extreme scenario of the euro actually falling apart? Is that a 10-year time horizon?
What's extreme about it? None of them have ever worked in history.
Okay, when's it going to happen?
Oh, I said
this modest scenario.
Within the next decade. It could happen sooner. It could well happen sooner, depending on how the world evolves. But certainly within 10 years, there won't be a euro anymore. Now,
so why do you own them now?
I was going to say, I own the euro. Don't think I'm sitting here saying to sell your euros, because I hope you don't sell your euros. I own it now because there was so much pessimism last summer. everybody was horribly pessimistic. They were dumping the euro.
You don't sound like a big cheerleader right now yourself, though.
No, well, I think it's going to survive because they're going to bail each other out and smooth everything over, and then eventually the problems will come to the fore again. Now, just because I own the euro does not mean I'm right. Oh, I've lost plenty of money in my life. I've been on the wrong side of trades often, but I happen to, at the moment, I own it because I think that they will smooth it over. Everything will look okay for a while. The euro will seem sound. It'll go up or not go down anymore, and someday I'll have to sell, yes.
Can you foresee when that might happen?
No, I wish I was smart enough to know that. I mean, you know, there are lots of people who you interview on your Thomson Reuters every day who can tell you exactly what's going to happen and when. I'm the world's worst market timer. I'm a horrible, horrible short-term trader, so I'm not any good at it. I just sort of watch and see how things evolve, and eventually I reverse my position if I think I should.
A long-term trend that you were on very early, which is now sort of flavor, maybe not even of the month, flavor of the decade, is Asia. What are you seeing in Asia now?
Well, all the creditor nations in the world, basically the largest creditor nations in the world are China, Korea, Japan, Taiwan, Hong Kong, Singapore. I mean, that's where the assets are. That's where the money is. And you know who
Middle East?
Well, they're in Asia. I mean, you know, Saudi Arabia's in Asia. That's where the money is. That's where the assets are. And you know who the debtors are, and you know where the debtors are. There's an enormous amount of vibrancy in Asia. Everybody still works very hard. They save and invest huge amounts of their income, and they work for the future. It's not quite the same as it is here in the West. I mean, it used to be this way, and you know, when I was growing up in the U.S., it was a lot of this kind of attitude.
We've gotten lazier in the West than when you were growing up?
Well, I certainly have the impression that things are not the way they were when I was growing up, yes. And I think the statistics probably bear that out.
What about the concerns of bubbles now, asset bubbles in China, maybe in particular in real estate? Are you worried about that?
Well, of course, I'm always worried about any kind of bubble. And in my view, there is certainly a potential and maybe even a present bubble in urban coastal real estate in China. Not all Chinese real estate by any stretch, but urban coastal real estate. I mean, Hong Kong prices are really, really high. Shanghai, Guangzhou, a few places like that. So yes, I'm very worried about it. But even if it pops, let's say there is a bubble and it pops, it's not going to end the Chinese economy. That urban coastal real estate bubble is a price bubble. Prices are too high. It's not like here. We had a credit bubble in the U.S. We had people buying 4 or 5 houses with no job, no money down, and then they bought more houses. And then the bankers took it and turned these little things into these beautiful little credit instruments. And the whole thing was a huge, perhaps the biggest credit bubble in the history of the world. The biggest I've ever read about, anyway. So that's
and the biggest
different.
of your career?
Oh, certainly the biggest of my career. No, sir, I'm talking about history. I've never read about one like this in history. So that kind of huge credit bubble is certainly different from a price bubble, which seems to be what's happening in China. If people go bankrupt, if real estate speculators go bankrupt in China, it's not going to bring down the Chinese economy.
In the U.S., and we saw this particularly vividly during the midterms, we're seeing China become somewhat of a bogeyman, and China being painted by both the right and the left as the culprit in America's economic problems, with particular focus on the undervalued Chinese currency. Is that a fair assessment of what's going on in the world?
What, the politicians are finding somebody else to blame? Of course, that's a fair assessment. It always happens. Whatever country you're talking about, any time in history, when things go wrong, politicians always blame 3 groups of people. They always blame the foreigners, because the foreigners don't vote, the foreigners aren't there, they have different languages, different religion, their food smells bad, they smell bad.
Chinese food smells bad?
No, I'm telling you what politicians always say about foreigners. Then they start saying, oh, and their food smells bad. And then they say the people smell bad, all those foreigners. Whatever kind of foreigners there are. Politicians always blame foreigners.
And that's what's going on with the China story?
Yes, the other group that they always, just so you know, the other group that they always blame are bankers, financiers. Nobody likes financiers when things go wrong. They blame all their problems on bankers. So foreigners, bankers, and the third group they always complain about are journalists. Because if the journalists didn't write about these problems, we wouldn't have the problems. But this is nothing new. It happens for thousands of years. This is the way politicians react. So when you say, is it a fair assessment? It's a fair assessment that that's the way they're acting. Blaming our problems on China is not the solution. Yet, I think that China should let its currency go float free. If I were China, I would let the currency float this afternoon.
And what's holding them back?
Well, there are many people in China who think that if they do that, that some parts of the Chinese economy will suffer. Now, for whatever reason, they're overlooking the fact that many parts of the Chinese economy would thrive, would benefit if they let the currency be convertible. For whatever reason, the people who think that they would suffer have more power than the people who realize that they would be better off. This is one of the mistakes that I think the Chinese have made and are making. I didn't think they would hold it this long. You know, I think it was at Thomson Reuters where I was interviewed once, and I said, oh, by 2008, the Chinese currency will be convertible. Shows how much I know. But I think they should let it go, but who knows when they will, if they will.
And do you agree with the view that the Chinese are gradually moving in that direction,
there's no question about that. No, and it doesn't make the press very much. It's certainly not the Western press. You know, it is convertible with some of the neighbors now. You can trade with the Vietnamese or the Russians or the Malaysians.
There's even a Thomson Reuters product, believe it or not.
There's a what?
There's even a Thomson Reuters product to help them do that.
Oh, well, see, I should come to Thomson Reuters more often. No, they are Hong Kong it's almost essentially freely convertible. You can use the renminbi in shops in Hong Kong now. No, they've certainly opened up an enormous amount. They have currency swaps with some of their neighboring countries. It's happening. It's not happening as fast as I would do it, but I don't vote in China. I don't have a say-so in China.
Can I ask you to predict when there'll be full convertibility?
I told you, 2008.
Okay, let's not do the past prediction, but the future one.
Why
Are you going to take a risk?
To me? I was wrong about it the first time.
Some people will. Just to give it a try.
It's becoming more and more convertible.
2012? Just in time for the
U.S.
election?
You're talking about fully convertible?
Yeah.
Like the euro or the Australian dollar or something like that? I would probably say by 2013, but I mean,
I was just 1 year off.
But this is an absurd projection for me because it's opening slowly. It's happening. I mean, I own the renminbi. It's full disclosure. I own the renminbi, and every time I can, I buy more renminbi. There are legal ways to buy the renminbi. I mean, it's not like buying the euro, but I buy whenever I can because it's becoming more and more convertible.
And how about another China issue we hear about a lot from Washington and also from some European capitals, which is this issue of Chinese domestic demand and the notion that you really need Chinese domestic demand to increase to see a strong global economic recovery. Do you buy that?
Well, I certainly don't buy that Washington, D.C. can tell somebody how to run an economy. Are you kidding? As recently as 1987, we were a creditor nation. Now we're the largest debtor nation. We're not just the largest debtor nation in the world. We're the largest debtor nation in the history of the world. So you think those guys in Washington should tell anybody how to run an economy? Oh, please, you're bad for my nervous system. No,
okay, what about the essential point, though, if it were made by a Martian, say, that Chinese domestic demand needs to increase?
Well, first of all, the way you build an economy, a thriving, growing economy, is you have high savings and high investment. That's what the Chinese have. That's the way you build a long-term economy. That's what we did.
Someone has to consume, though, right?
Eventually, yes, but first you save and invest. Investment in productive capacity is what leads to long-term growth of an economy. You don't build an economy by going to the disco every Saturday night. That's not the way you build a long-term growing economy. You save, you invest, you build productive capacity, and from that comes internal growth and internal consumption eventually. But you don't just sit down and say, okay, all you guys have saved 35% of your income. Let's stop investing for the future. Let's all go to the disco every Saturday night. Let's spend it on new cars and new TVs. That's wonderful for a while, but that does not build a long-term sound economy.
If we see every nation, though, pursuing that kind of an export-driven national economic agenda, aren't there going to be strains?
Wait, I didn't say export.
You said production, but where, if everyone is saving and producing, where are all those goods going to go? Who's going to consume
build factories, you build highways, you build schools, you build transportation. All of that leads to cheaper internal consumption, and eventually, yes, people grow. The people who build the roads buy beds, they buy clothes, they buy houses. No, this eventually it all grows.
As long as they're not going to the disco, it's okay?
They can even go to the disco if they want to, once a month. I'll let them go to the disco once a month. No, but this is the way, look at the way America grew. That's how America grew. We saved, invested huge amounts of money. We borrowed a lot of money. We were a debtor for a while, but the money we borrowed went into railroads and canals and productive capacity. Then we became a creditor nation. We became the most successful creditor nation in the 20th century, and things were great. And we all consumed, and we had homes and cars and the rest of it. That's the way it's supposed to work. But sitting down and saying, okay, you people stop saving now, stop building highways, stop investing for the future, and start consuming. You can do it, but it doesn't lead to long-term growth.
Not everyone can be a creditor nation at the same time, though. How
That's
do you
correct.
get a global balance? What's the right way?
Well, one way, unfortunately, since the way things are building up, you have currency crises. And we're going to have more currency crises. We've been having currency problems and currency crises. You mentioned Iceland before. Well, there are more coming. It used to be in the old days when we had the gold standard, the gold would flow from the creditors to the debtors, and then back from the creditors, from the debtors to the creditors, and then the system would balance itself. We don't have those kind of automatic adjustment mechanisms anymore, and so you're going to see more currency crises. It'll be resolved, if you consider that a resolution, in the currency markets.
So we've been talking about the euro. What are the other currency crises that you see in the future? Where are the points of strain?
The United States dollar, the United Kingdom pound, mainly the creditor nations will benefit and the debtor nations will suffer. Now, I own the U.S. dollar as we speak too, even though I've been sitting here telling you some dire forecasts.
You're anti-Europe, anti-U.S., but you own the euro and you own the dollar.
That's why, because everybody in the world, including me, is very pessimistic about the U.S. dollar. And I've been investing long enough to know that usually when everybody's on one side of a boat, you better go to the other side of the boat as fast as you can. Now, doesn't mean I'm right, but I own the U.S. dollar and I own the euro partly because of all the pessimism.
Let's give the Brits a chance to be whipped a little bit. How do you think they're doing?
It's a disaster. I mean, I don't particularly like saying that. Some of my happiest memories are from the UK, and some of my greatest triumphs are from. I got married in the UK. I went to university in the UK. The first time I got in the Guinness Book of Records was in the UK, so I have wonderful memories of the UK. But now, I mean, they've had a horrible balance of trade deficit for 25 years. It's getting worse. Two of the things which propped them up were the City of London and the North Sea, both of which are drying up now. I don't see anything to replace those sources of income for the foreign currency account. So, they've got a new government which at least is saying the right things.
Is it doing the right things? It hasn't just talked. I mean, they've done some pretty bold things.
They've started doing some bold things. So I'm not convinced it's enough yet.
You mean the austerity measures should be even tougher?
Yes. I mean, the deficit in the UK is staggering. And yes, they're attacking it and trying to solve the problem. But remember, they have huge debts in the UK. It's a very, very large debtor nation now. It was bankrupt in the 70s. It was bailed out by the IMF. But then along came the North Sea oil, which started flowing in 1979. So things were great for a while. But now the North Sea is starting to dry up.
And what's your view? How does this translate into a view on the pound?
I don't own the pound. I sold all my pounds 2 or 3 years ago. I expect the pound to be a seriously a currency with serious problems over the next 5 years, just like the U.S. dollar.
Even worse than the wretched euro and the wretched dollar?
The euro will be better than the pound and the dollar, I suspect, unless the euro disintegrates sooner than I think it will. No, you mentioned two currencies which are going to have serious problems. I wonder, and I often wonder, which is going to go down faster, the U.S. dollar or the UK pound?
And your judgment at the moment is?
The pound will be worse than the dollar. I own the dollar, so I hope it's worse. But you have to understand that the best...
Harry Evans is distressed here.
Yeah, that's brilliant.
Oh, hello, Harry. I haven't seen you in a long time.
No, I'm your publisher.
I know you are,
You're
yes.
a very good publisher.
No,
Okay, well, we'll
I
Oh, my.
an Esky or a refrigerator.
I'm very delighted
okay,
to
we're
see
duly
you.
warned. We're duly warned.
What are we warned about, Harry?
No, about your ability to sell refrigerators to
No.
Eskimos.
Yeah, he's worried about the pound. And the Chancellor's coming through next week.
The Chancellor of the UK coming to New York, probably to try to borrow some money.
I'll send you an invitation.
No, I'm leaving tonight. I'm going back to Singapore
Okay.
tonight, so I won't be here.
There you go. Now, moving swiftly onto commodities, another area you focused on for a long time. What do you see there? If the world is in so much trouble, maybe that's a good safe haven at the moment.
No, look, not everybody's in trouble. There's some. I'm wildly bullish about a lot of things, and one of them happens to be people who produce commodities. There are great shortages developing in the commodities world, and it's going to get worse or better depending on how you look at it. No, prices of commodities are going to continue to go up for a long time. If the world economy gets better, commodities are going to go up in price because there are shortages developing. If the world economy does not get better, you should own commodities because they're going to print more money. It's the wrong thing to do, but that's all they know to do, so they will print more money.
So commodities good no matter what?
That's what I just got through saying. I'm glad I've made myself clear. Yes, the commodities are less bad, if nothing else, than anything else, because in times of printing money, whether it's silver or rice or natural gas or whatever, real assets are the way you protect yourself.
I noticed you didn't mention gold.
Oh, I own gold too. I didn't. I could name a lot of things, but no, I certainly own. But
You don't think it's
look,
overvalued?
It's overvalued. Well, you
Yeah,
can ask.
I'm asking you. Do you think it
No,
is?
I'm not selling my gold. No, I certainly own gold.
Are you buying more?
No, I don't like to buy anything making an all-time high. If I had to buy a precious metal today, and I'm not buying any, I'd rather buy silver. I mean, silver is 40% below its all-time high. Gold just yesterday made an all-time high. So no, I'd rather own silver. But I own both, and I'm not selling either.
Now, as I mentioned to you before we started, my father is a farmer, and he was very excited that I'd be talking to you today and asked me specifically to ask you
I was
about
excited I'd be
agricultural-
talking to you today, too.
Well,
So.
there you go. You and my dad both. So he specifically wanted to know about agricultural commodities. What's your view?
I'm more optimistic about agricultural commodities than most things. You were very smart to have a farmer as a father. That was very clever of you.
Great calculation.
No, farming is going to be one of the most attractive professions and industries in the next 20 or 30 years. So don't sell the farm. Don't sell the farm by any stretch. In fact, buy more if you can, because that's going to be a very, very exciting industry.
Buy wheat futures, buy oilseed futures.
Well, first I want to tell you, all the people in here who got MBAs, they made a terrible mistake. They should have gotten an A&M degree.
My dad doesn't believe you need a degree to farm.
I agree.
He
You don't
thinks
need.
just have to
You
work
don't
on the
need a
farm.
degree to go to Wall Street. You don't need a degree to do anything. They're good to have, and I have a couple. But no, he's right. He's right. You can do most anything without a degree.
So how about grain futures? Are you buying those?
No, if I were, they're all pretty strong right now. I'd rather rice maybe. Buy some of the things that are still, like I said before, you buy the things that are depressed usually rather than the things that are skyrocketing.
I am going to ask Mr. Rogers maybe one or two more questions and then throw it open to everyone else. So please get your questions ready. What about oil?
I own oil. The great surprise with oil is going to be how high the price stays and how high it goes. I mean, the world is running out of known reserves of oil. The IEA, the International Energy Agency, goes around the world pleading with people to listen that the world is running out of known reserves of oil. Unless something happens quickly, 20, 25 years from now, we're not going to have any oil at any price. So no, we have a huge problem facing us down the road. So don't sell your oil. And I mean, if the UK suddenly goes, if there's a big surprise, say the UK or Country X suddenly goes bankrupt, I'm worried that Harry's going to think I'm saying bad things again. Everything will go down. But then you better buy all the oil you can because it's going to skyrocket again.
And what about high tech? Both green technology and Silicon Valley. We saw.
Well, those are two
recently.
entirely different things.
Okay, start with green tech.
Well, everybody loves green tech, as you call it, because it's
a good thing.
Because everybody thinks it's a good thing, and I mean, wind power and solar power are not competitive in the market with oil right now, except for the fact that they're subsidized. But since everybody loves green technology or green energy, then of course the subsidies will continue. And if you can find people who are smart and efficient in that business, you'll make a lot of money, because the subsidies are not going to disappear. And eventually, some of those companies are going to be extremely competitive with energy, and they'll make a lot of money.
Okay, my last question, so get yours ready. Internet. We saw Groupon turn down billions of dollars from Google. Does that mean it's a bubble, or does that mean this is the one place where there's huge, terrific growth?
I don't have a clue. I don't know. I barely know who they are, much less why they did it. So no, I don't know. Read your Thomson Reuters to find out.
Okay, well, how can I resist? That's a perfect moment to see if anyone else has some questions. Please, Harry, I'm going to make you ask a question if no one else is brave enough. Okay, fortunately they are. Please. And if you could introduce yourself before you ask the question.
Hi, hi, Mr. Rogers. I'm Jason from China's Xinhua News Agency. And we met before. It's nice to meet you again.
Nice to see you.
My
I would
question
like
is.
him to answer the question in Mandarin, please.
I said ni hao. What more can I say?
Ni hao, ni hao. My question is about China. As you may know, China has now facing a very serious inflation problem. So what do you think caused the problem? And the second question is the Central Bank of China.
Well, let me answer the first one first, because I'll forget the second. The problem
And then
is,
we'll go to someone else, and you can ask another question later on once we've exhausted the others, okay?
the problem is caused because they've printed a lot of money in China in the last few years for a variety of reasons, and the money is trapped. Exchange controls means that the money cannot leave. At least when people print money, if it can leave, the currency adjusts, and that's one of the mechanisms by which currencies or economies can have a release. The Chinese have a blocked currency, which, as I said before, I think is a mistake, and that's one of the reasons you have inflation, and it is a serious problem in China, as you well know. They're trying, they know it too. I mean, the Chinese government knows it too. As you know, they've raised interest rates. They've raised reserve requirements several times. So they're trying to do something about it. Another solution would be to let the currency float. They've decided not to do that for whatever reasons. So the inflation problem is going to continue. And on top of that, Jason, of course, you have a bull market in commodities, whether governments print money or not, because we do have shortages developing. So it's making it worse. We have the bull market in commodities anyway. Then you print money, which is pouring petrol or pouring gasoline onto a raging fire, and that just makes it worse.
Okay, please.
Yeah, Mr. Rogers, my name's Aaron Elstein with Crane's New York Business. One of the reasons the Chinese and I guess other Asian countries have so much money is they don't spend it on Medicare or Social Security. And I'm wondering, as those countries evolve, would you expect them to develop welfare states like we have in the West?
Well, one of the reasons they have such huge savings rates is just what you said. They have to save to make sure that they can take care of themselves and their children and their parents going forward. Usually, historically, countries have developed welfare states, as you call it, when they have crises or semi-crises. So if and when the Asian economies start having serious problems, I'm sure that they will do the same thing that everybody else does. The people will clamor for something from the government, and the politicians will give them something, and then you'll have this is the way countries evolve historically. There's nothing new about this or unusual about it. It's always worked. But so far, the Chinese the Asians, not just the Chinese, most Asians haven't had the same kind of economic crises that we in the West have had and probably face in the future.
So just as a follow-up, do you see that happening? I mean, do you see some sort of a pivotal moment that will lead to the development?
I'm talking about a few generations. Usually these things don't happen overnight. It takes a while for countries to get to that stage. But that's what I said. Throughout history, you've had governments and politicians give more and more and more. I mean, we were talking about before, throughout history, politicians or statesmen or historians have looked back and seen how nations have evolved. They've nearly all evolved that way. I mean, Plato in the Republic talked about how countries, go from dictatorship to oligarchy to democracy to chaos, and then back to dictatorship, oligarchy, democracy, and chaos. These things this is the way societies and countries have evolved for thousands of years, apparently, and this is what will probably happen in Asia, too, eventually.
Okay, thank you. I think we had a question over there. Okay, please.
Jim Brunn, Forecast Trading. You said that commodities are a little high in certain commodities, but grains are quite high, metals are pretty high, silver's making new highs, even crude's near just hit 30, but all these commodities are quite high, but you don't want to buy them yet because they're a little on the high side. So do you see a pullback in the next 6 months to buy these things? Or do you see commodities doubling or tripling in the next 12 months or 16 months?
I've already explained I'm the worst market timer. I do expect commodities to be much, much higher over the next decade. If you and I were sitting here in 1992, say, talking about stocks, we would have said, my gosh, stocks have gone up a lot over the past 10 years. Look how high they are, et cetera, et cetera. But it was really only halfway through the bull market. Exactly the same thing with commodities right now. Yes, they're very high now if you look back in history, but they're going to be much, much, much higher over the next decade. Even I am going to be stunned, and I'm the bull. Even I'm going to be stunned by how high they get eventually. What happens is bull markets always go through this thing, and by the end, 15 or 20 years into them, there's hysteria. Everybody's walking down the street talking about how much money they're making in pork bellies. You go over to Park Avenue and everybody will say, oh my God, let me tell you about my soybeans. The same way it was in 1999. You walk down the Madison Avenue and there was a TV set in every shop window showing you the stock market because everybody was wildly bullish. That stage of hysteria will come to commodities eventually. Not yet.
We're not there yet. People, gold is pretty.
If I just held a gun to your head and said, where will gold be a year from now?
I don't have a clue. I do have a clue that gold will certainly go over $2,000. Gold its all-time high adjusted for inflation was well over $2,000. It will go there. I mean, you can dream. I have no idea. If the dollar does collapse in the next 10 years, which I expect, you pick your number. When you have declining currencies and things are denominated in U.S. dollars, who knows what the prices will be? They will be unbelievably high. They're going to be much higher than even I believe. When I was in the 70s, didn't grow up in the 70s, but in the 70s, I remember people talking about beans in the teens. With certain beans are already in the teens again, as you know, and they didn't make it in the 70s. But beans are going to go huge, $20, $30, $40 before this is all over. The numbers are going to be staggering. It's always that way in a bull market. If you and I had sat here in 1992 or even 1982 or 1992 and we talked about where prices would be 5, 10 years later, nobody would have believed us. Cisco was probably $3 in 1992. Cisco went to whatever it went to. Staggering numbers.
No. Come on, you've had two already. I cut someone else off who wanted. You can ask after. You can ask after. Thank you.
Thank you.
Please.
Hi, Catherine Timke from CNN Money. You're pretty pessimistic about currencies overall. Are there any currencies that you really are a fan of? Maybe the Australian dollar? You actually didn't really talk about the Australian dollar at all, but I was just wondering if there were anything in the currency market that you actually liked.
I own several currencies. My problem is that politicians all over the world have learned to buy votes, and the way they buy votes is the simple way is to print money or to base the currencies. There are only 1 or 2 countries in the world that don't want to debase their currencies now. I own several. I can give you arguments against every one of them that I own. I own the Australian dollar. I own the Canadian dollar. I own the Japanese yen. I own several. I don't have much confidence in any of them. The renminbi is one of the few things I have an enormous amount of confidence in. There's no such thing as safe in the investment world, but perhaps the safest investment I know is the renminbi down the road. So yeah, I own several currencies. I can give you arguments against every one of them, including the renminbi, but I own it.
How about the real?
I do not own the real just because I'm lazy and lethargy and sloth.
I don't really believe that as an argument.
And of course, they're now they're putting exchange controls on. We're going to have more exchange controls around the world, I'm afraid, before this is all over. I do not own the real. I should, but I don't.
Please, Aline.
Hi, Aline Van Dyne from the Financial Times. In the past, I think you've said that you wouldn't be a seller of treasuries because the Fed was a buyer and it was hard to kind of stand against the buying power of the Fed. Do you think, has your view changed on that? Do you feel that the Fed is still going to prop up the value of treasuries?
Well, you're exactly right, and I did say that, but I'm short treasuries as we speak. A couple of months ago, there was a period where when, bonds, it looked like the treasury was in there with both feet, and so I started shorting bonds. To my amazement, I'm making money, because usually I lose money for a while when I take a position, but I'm short treasuries right now. I don't know how long I will be. I hope I'm short for a long time. I expect interest rates in the U.S. to go much, much, much higher over the next few years. But I am short treasuries as we speak.
More questions? Please. Just hang on one sec for the mic. Jason, do you mind passing the mic over?
Okay. I'm just a fan. I'm not with any firm right now. It just seems to me...
I'm not with any firm either, so we're in the same shoes.
The moral hazard of our country doing what it's doing is enormous. And people don't seem really well informed either. Rather complacent. I guess that's all I have to say.
Well, I'm a citizen of the U.S. like you are, I guess, and I pay taxes here like you do, I guess. I don't particularly like what's happening either. No, it's destroying the fabric and the future of the country. In 1918, the UK was the richest, most powerful country in the world. Within 3 generations, the UK was bankrupt. Within 1 generation, it was an economic shambles because they'd been making a lot of mistakes. I don't like what's happening either, but I have to be smart enough to recognize facts. I can't invest or live the way I would like for things to be. I have to live my life based on facts. And unfortunately, you're right. They don't seem to be understanding the situation in Washington.
Please.
Hi, I'm Abby Gruen with SNL Financial. In the U.S. this year, natural gas has gone down very low and, in fact, is derailing many projects, generation projects for different types of fuel. 2 years out, people are still expecting it to stay low. In terms of your decade, where do you think natural gas is going to be?
Well, I mentioned before that you should think about buying things that are depressed, and natural gas is one of the more depressed commodities. And so I would certainly urge you to consider looking at natural gas as something to buy. I expect natural gas to be much higher over the next few years, and maybe even over the next 2 or 3 years. I'm not suggesting you buy it, it's going to be higher in 2 or 3 years, but natural gas is certainly one of those commodities which is still very depressed and where there are probably wonderful opportunities.
Do you own natural gas?
I own all the commodities. I invest in commodities through, I have a commodities index. My lawyer won't let me buy individual commodities because, I write books about them, I talk about them,
You talk them up in the media.
Yeah, that's what I said. So he won't let me buy individual commodities, and rightly so, I'm sure. So I just buy the Rogers Index. And so, yes, I own all commodities. I own all commodities through the Rogers Commodities Indexes, but I don't buy individual commodities anymore.
Okay, our host, Chris, wants to ask a question.
Yes, on the back of this nice woman's question or comment, I should say, and you speaking about advice from your lawyer, if you had Ben Bernanke and President Obama in a room, what one specific piece of advice would you give them, given the dimensions of what you've talked about today?
I would say abolish the Federal Reserve and resign.
Okay, that's a very good soundbite, but what happens if you abolish the Federal Reserve? How does the economy work? It's a great line, Jim, but tell me how the world
throughout
works.
history, it's not as though the world has always had all these central banks. 30 years ago, you would not have been able to name any central banker in the world. It's only been in the past 10 or 20 years that the world even knows we have central banks, and most people still don't. In America, we've had 3 central banks. The first 2 disappeared. We've gotten along quite a lot of American history without central banks. Now, yes.
It's kind of tough to operate, though, without a currency. I mean,
no,
do you
you
want
don't
me
have
to
to have
bring my dad's grain to you when I want to buy stuff? When I want to buy a house?
You don't have to have a central bank to have a currency. I mean, the world's been having currencies for thousands of years without central banks. No. Don't think that that currencies come from central banks. That's what I mean. Everybody thinks that they're these wonderful, wonderful inventions that came from the sky. It's not true. Yes, you do have problems when you don't have central banks. But in the present case especially, we have worse problems because of the central banks, and our problems are going to be much, much worse. You know, Mr. Greenspan took interest rates down to almost nothing, led to 2 or 3 bubbles here in America in the past 10 or 15 years, all of which have caused great economic problems for which we're still paying. Mr. Bernanke came along, took on staggering amounts of debt, of garbage, onto the central bank balance sheet with no authorization from anybody, and yet all of us, taxpayers anyway, are on the hook for all of that debt, which he took onto the central bank balance sheet. Now he's printing even more money. All of these things would not be happening if we didn't have a central bank. Now, don't get me wrong. Yes, without central banks, you have problems, but they're not nearly as bad as the problems you have with central banks.
Is Bob Zoellick right to suggest a return to the gold standard?
That's not what he suggested. He just said gold is being used as a standard. The gold standard.
Dangerous journalistic sensationalism.
I know.
I know you would never do that.
It helps sell newspapers. I know. The gold. I'm not an advocate of the gold standard. The gold standard has never worked either for any long period of time. Yes, we've had periods in history when they had, quote, the gold standard and things were great for a while, but eventually that too caused problems.
So what's the right thing? You and I just do a deal on the currency.
Well, the thing is that the way history has always worked is, throughout people could use whatever they wanted. If you and I wanted to use seashells, we can make a deal and use seashells or cattle.
Isn't that going to make my life kind of complicated?
For the people who use seashells, they wouldn't have used them if they thought it would make their life complicated. People have used things that they had. Silver has been, throughout history, silver has been used as money more than anything else, historically.
No gold standard, a silver standard?
Well, America was founded, if you read the American Constitution, it was founded on silver. And most countries have used silver much more than gold. We've had the gold standard a few times, and we've certainly had gold throughout history. But silver has been used as money more than any other single item. But to answer your question, if you let people use what they want, populations and societies have always developed what they wanted to use as money, and that's what they used as money. And then if they ran out of seashells, they moved on and used something else. That's the best way to let nature take its course, let societies evolve. And this may sound radical to you. It obviously does, since you didn't even know we didn't have central banks. But no, throughout history...
I didn't say that.
Throughout history, that's the way economies and currencies have evolved. Every nation, every small nation, every city-state, every society, that's the way it's evolved. It's only been in the... even as recently as 80 years ago, in the 30s, people all over the world used, in the UK, they used whatever they wanted. In the 30s, when they had the Depression and the UK government was on the ropes, they passed a law which said you have to use sterling. You cannot use anything else except sterling. But that was such a radical thing that the government did. They made it an act of treason to use anything except the pound sterling in commerce. I mean, it was a pretty radical measure to make it an act of treason. They'd execute you if you tried to use gold or silver or seashells in commerce. But that's the way the world has always been until the past 80, 90, 100 years.
And we should go back to that.
You asked me what I would do? Yes. I would say if you and I want to use seashells, we should be allowed to use seashells. Now, if you and I use seashells and nobody else does, we're going to have to adapt. If everybody else...
Or find a use for seashells.
Or find a use. But if everybody else in the room is using silver, we're using seashells, we're going to adapt very quickly and use silver.
Okay. Please. And I'll take that question, then one more, and then we're going to have to wrap
Stevan
up.
Marchetic from Gold Bullion International. Okay. Stevan Marchetic from Gold Bullion International. I remember watching you in Paris a couple of years ago in 2008 when you made a conference, and it was also a similar sentiment, bullish sentiment on commodities as right now. I would like to ask you, what's your opinion on the chances of another liquidity crisis coming? Yeah.
Well, the crisis in 2008 was not a liquidity crisis. It was a credit crisis. Central bank tried to turn it into a liquidity crisis. You had a couple of people like AIG and Lehman Brothers going bankrupt, which caused a lot of artificial forced selling, which made all assets collapse, especially the ones that they were big in. The governments then pumped a lot of money into the system, which in my view was a mistake, but that's what they did. They confused a credit crisis for a liquidity crisis, and they've printed a lot of money since. We are certainly going to have more crises coming down the road. I explained before that we're going to have more currency crises. Let's look at the world. Every 4 to 6 years throughout history, America's had an economic slowdown or a recession. It's just always happened. It happens this way all over the world throughout history. So we're going to have another one someday. And we would be overdue for one by, say, 2011, 2012, 2013. There'll be another economic slowdown in the U.S. and therefore in the world. What's going to happen then? Is the United States government going to quadruple its debt again? I don't think so. I don't think anybody will give them that much money. Is Mr. Bernanke going to print even more money in 2012? The world will run out of trees at the rate he prints money, at the amount of money he would have to print. By the way, for those of you who know, paper money is really not made of paper. It's made of cotton, just so you know. So the world will run out of cotton by the time Mr. Bernanke starts printing money at that time. So we're going to have more serious crises down the road, back to what I was saying before, because they keep trying to delay the problems instead of acknowledging the problems and dealing with the problems. So the next time we have a slowdown, and we will have a slowdown, we always have anyway, America shot all its bullets. England has shot all its bullets. I don't know what the world's going to do the next time there's a problem, because it would just take staggering amounts of debt to even deal with the problem, much less to solve the problem. And so when that comes next, it's going to be worse than the last time.
Okay, and we have run out of time. Our last question is going to come from Stella Dawson, our new Reuters top news editor in the U.S. Please, Stella.
Mr. Rogers, you've painted a rather scary picture. Would you help me organize my thoughts for 2011? Which are the 3 biggest risks and the greatest investment opportunity that's underappreciated?
Well, I explained to you that I am wildly optimistic about a lot of things. Her father's a farmer. I think that's one of the most exciting professions you will have. Throughout history, we've had long periods when the financial centers were in charge. But we've also had long periods when the people who produced real goods were in charge, the farmers, the miners. We've had 30 years where it was finance. That is changing. All you people who got MBAs made mistakes, because the City of London, Wall Street are not going to be great places to be in the next 2 or 3 decades. It's going to be the people who produce real goods. I am wildly excited. Now, that probably sounds absurd to you, but I would remind you that the 50s, 60s, and 70s, the City of London, they were backwaters. Only the idiot's son went to Wall Street. That's why I went. I didn't have enough sense to do anything else. Nobody in his right mind went to Wall Street in those days. I went to a couple of fancy universities. I went to my professor, one of them said to me, we don't have anybody around here who talks about investing or stock markets. We don't know about people like you. It's very, very unusual. This was in the mid-'60s. But now, of course, at that same university, 70% of the class goes straight to the financial centers because the world changed. We had the bull market in the 80s, 90s, and the 10s. That's finished, totally finished now. So there are many wildly exciting professions, countries, and areas to
so
invest.
still ask for 3 positives, 3
I
negatives.
know, I've just gave it 3.
What are the 3? I have farming as a positive, Wall Street as a negative.
Commodity, any commodities that you want to get, any real assets you want to get involved with, you, whether as an investor or a profession. I'm saying to you, we're shifting from finance to the producers of real goods. And they're going to be wonderful, wildly good opportunities. In nations, well-run nations that produce real goods, Canada, for instance, Canada's going to do a whole lot better than Belgium in the next 20 or 30 years. So you find those countries. I mean, I can name you 3, I can name you 6 if you want, but you're smarter than I am, so you can figure them out for yourself. And the best place to be is in real assets. I said, if the world economy gets better, commodities are going to do very well because of the shortages. If the world economy does not get better, commodities are still the best place to be because then they're going to print a lot of money. So there are plenty of places to invest. Whether you buy agriculture or go to Canada and open a chain of restaurants, whatever it happens to be, there are many, many wonderful opportunities.
And your biggest risks, your biggest geopolitical risks, where you
Washington. Washington printing money. You know, there are people who, and I haven't done enough homework, but there are people who swear to me that the U.S. will be defaulting on its debt within the next 5 years, and if Washington, whether we like it or not, the U.S. is the largest economy in the world, the largest single nation economy in the world, and we're doing very, very foolish things. We're printing money and running up staggering amounts of debt at a time when we're debasing our currency. And ultimately, that has always led to problems in the world economy. And, you know, I wish it weren't true. I'm an American taxpayer like you. But I have to deal with facts, not with fantasies.
Okay, well, I think that was probably a bracingly realistic tour d'horizon. Thank you very, very much, Mr. Rogers. And for my own self, you've convinced me that my whole adult life has been a mistake. And rather than being in New York talking about finance, I should be back in Peace River working on my dad's farm. He'll be very happy to hear that. And I think that your historic predictions will go down in the books, and this will be known forever as the Great Seashell Standard. Rogers.
Well, I don't use seashells. I am not long seashells. I am long several currencies. I am long lots of real assets, but I don't have seashells yet.
That will be next. Thank you very, very much, and thanks everyone for your questions.